Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
Good morning, ladies and gentlemen. Welcome back to episode 182 of the AJ Brown Show. Today is a new month. Well, actually, yesterday was a new month, but a new month for the show. Today's May 2nd, Friday, Jobs Day. AJ, good morning, sir. How are you feeling? I was been looking at the markets, and I'm like, man, I'm glad I have AJ in my sphere to help me explain all the things that are going on because I mean, it seems like, we're just kind of in this limbo. What are your thoughts? How are you feeling? Where do we want to begin?
Definitely nothing that solidly is happening is affecting the price action. I think we're used to that. So let's start with employment news. Employment news actually came out somewhat positive. Here I've got it right up here in our economic calendar. Um, yeah, let's dive right in. The payrolls came in better than expected. So 177,000 compared to what was expected, which was 130,000. So jobs is supposedly up, I guess, depending on whatever your frame of reference is, compared to March. Well, March they revised the number down pretty, by about 40,000 jobs. And if you look at March's numbers compared to this month's numbers, I mean, it's not great shakes, but it's also, I mean, I guess in this case, it's no news or flat news is better than down news. Unemployment rate stayed at 4.2%. I mean, that's not stellar, but it's again not getting higher. So yeah, I think that people are taking this as a win. And then we definitely have to take a look at some of the economic news from Wednesday, right? We had our GDP numbers. GDP numbers, this kind of surprised people. GDP numbers. Now, do you remember, SIP, that the GDP is reported 3 times over the quarter, and the advanced is the first attempt. Next month, they'll come back with preliminary, and then a month after that, they'll come back with final numbers. So the advanced numbers for quarter one is that the market actually shrank by 0.3%. They were expecting it to grow by 0.2%. And what happened last quarter, quarter four, was ultimately a growth of 2.4%. So these GDP numbers show that we've kind of put on the brakes, and we'll see what happens next month when we get our preliminary numbers, maybe we've gone in reverse a
Yeah,
little bit.
it was like the rhetoric was when they asked Trump about this. It was like, oh, this is still Biden's economy. It's not my economy, right?
Yeah, it absolutely, that was exactly what he said, that was Trump's economy, but or Biden's economy. That was interesting. And then, of course, the Fed looks at these personal income and outlay numbers. These are, the Fed's favorite data point. So let's take a look at that. Personal income. So for February, the number was actually revised down. So it was reported last month at 0.8% of an increase, but they went back and combed through the numbers and they said, okay, it's 0.7%. But then this month, they were expecting 0.4% growth on income, and they got a little bit better, right? 0.5% growth at income. So then you turn yourself to the expense side of the ledger, and expenses were a little bit higher. So last month, expenses turned out to be higher than what was originally reported. that's in contradiction to incomes being lower. So that's not a good picture for what happened, in February. And then expenses really kind of went up a lot more than expected. They're at 0.7%. Now, remember, this is month over month. So you kind of have to do this equation of 0.7 times 12, right? And if we pull out our calculator and we kind of do that math, 0.7 times 12, that would mean that inflation is up at what, 8.4%, with respect to our expenses. That's not good at all. Um, but then you look at this thing called the PCE price index, right? And so this kind of pulls out and makes it, pulls out anything volatile. Um, and so you look at that and it's flat. So that's a good sign that this is flat. So you almost wonder what sort of, funny money math games did they play from the zero point 0.7 down to flat. But this is what the Fed looks at, and they're saying it's flat, and they're saying that inflation is basically down to 2.3%. And core, so this is taking out things like food and fuel, which tends to be really volatile. And so that's dropped as well. So kind of, what the administration is saying, the administration being in charge of fiscal policy here in the United States, what they're saying is, hey, employment's doing well. And I'm not sure if you can actually get that from today's report, but they're saying that it was a good report. So employment's doing well and inflation is under control. And so you'll actually hear, we've already been hearing calls today that President Trump is calling on the Federal Reserve and Jerome Powell to cut rates because supposedly the picture is rosy. But I'm not sure the picture is that rosy. It just looks pretty blah to me.
I agree, and I have a data set to run by that's maybe more blue collar oriented in terms of some of the price action that we're seeing.
Sure.
With all this data that's coming out, it seems like earlier in the week we had these I don't know, blimps of somewhat mediocre data, and we've been able to rally from them. Today, we're taking the employment number as being positive. All leading to next week's Fed. I think next week is the Fed decision, right? So,
Yes.
um, and then I guess we could jump back to the consumer confidence because that fits into that storyline of like we've got production, we've got employment, we've got inflation data, we've got earnings this week too. So there's a lot of things coming at us. But today, where we're at in the market during the show, everyone's feeling good about these employment numbers, and we might not be seeing any rate adjustments anytime soon.
Yeah, so the sentiment by the CME group here with their survey, not next week. This is almost 100%, 98.7% are pretty confident that the Fed's gonna wait and see. Right, 425 is where it is. 425 is where they expect it to be at the end of you know the conferences next week. Now go to June, and this is interesting. We've been seeing that maybe leading up that we would see a rate cut in June, but ever since things have started to pick back up in the markets, investors are actually saying, hey, maybe not. Maybe the Fed is going to, you know, punt on May and punt on June and do nothing. Now, one thing the Fed has done, and they said they were going to do this at the last Fed meeting, is they actually have, if I zoom in on this quantitative tightening, this tool that, you and I look at, but most people forget about, they, for the most part, have stopped any quantitative tightening. So they're holding solid at 6.7 trillion in IOUs, versus when they sell those bonds back to the market, not only does it reload their tools so they can use it in the future when need be, but it also causes brakes on the economy. So by them stopping the quantitative tightening, they've removed those brakes from the economy. So and again, this is a tool that they sort of just mention a little bit, but I would actually argue that this tool, that how they manipulate the bond market with this tool, is actually more significant in monetary policy adjustment than rate hikes or rhetoric. And so to see that they have stalled their quantitative tightening tells me that the Fed is actually, releasing any brakes that they have been putting on the market, telling the market that they need to repay these IOUs to the Fed. um, it's looking like the Fed is letting that one go for a little bit because they don't want to basically put any brakes or a tax on the market at this time, from all the uncertainty being generated on the fiscal policy side of things.
Yeah, a crazy amount of uncertainty. And it always makes me think back to the S&P chart. I mean, I don't know if we
Mm.
want to touch on consumer confidence other than it was lower than the previous month and still under this 100 mark that you reference.
Yeah, absolutely. I mean, I have to point out, we got our consumer confidence numbers here, and man, they're low. And I talked about this last month because we dipped below 100. I could probably count on my two hands the number of times I've seen it below 100. To see it actually coming in at 86, uh, I think consumers are just stunned across the board, with what's going on in the markets and even in Main Street.
And if we want to pull up the S&P, I know last week we did some of your Fibonacci analysis, and we even
Hmm.
dropped a video on YouTube about the 5527 mark as being something of significant importance. And I saw that we kind of blasted through that. Would love to know your take now because we may have overextended a potential downturn. And I guess your analysis here is sideways chop is of the week. Well, today the week is a rally, but in general it seems like we may be stalling out here for the foreseeable
Yeah.
future.
I'm not ready to call this a, bull market, by any means. First of all, you'll notice on this drawing of my moves between tops and bottoms that I don't have any lines of support and resistance drawn. And that's critical. The reason is because this new trend direction that started on April 8th, when Trump, basically removed all that worry around tariffs. He basically said, I remember hearing this on on the playground when I was a kid. They were like, "Psych, we're not actually going to do all that crazy stuff that we've been talking about." That was on April 8th, April 9th, and that's when the market basically was like, phew. There's still tariffs in place, but not the crazy one that they put up on that chart where they were going to tax every country, from here to there. They're all on pause. So, um, but we haven't seen the legs under this new, trend. So I can't really call this a mature trend, and therefore I can't really say let's go out and trade bullish strategies, because all we've basically had, SIP, is one bull move. If I put my and I love how everybody out there in the internet world has called it my rainbow analysis. My Officially, it's called the retracement analysis. Yes, this one move has brought us into, an ideal bullish range expansion move. That's the kind of the academic name. Yes, but because this trend is not mature, because the previous moves were kind of, one move does not define a market. And so I would urge everybody, who thinks that this is the lows, that we want to just start buying so much stuff and getting in. I would hold off and make sure that this rally gets legs. And until then, we're going to go ahead and call this sideways chop. Even though, and I'm going to switch gears here, even though the VIX is below that founded, unfounded fear threshold that I have, it's below that $26. It's not majorly, it's at $23. It's not well below that line. This is meaning that it's great. Everything is queuing up for our option strategies, where we like to be in the business of selling insurance to those people who want to hedge their positions using options. So that's queuing up great for us traders. But for those traders who are listening to me right now, who are thinking this is the opportunity I'm going to get into in order to take advantage of a new bull market, I would hold your horses. Let's get through this earnings season. Let's make sure we get some maturity and get some legs under this current, move up. Realize that the last, what is it? If I pull back the S&P 500, 1, 2, 3, 4, 5, 6, 7, 8, 9, less than 2 weeks. The less than 2 weeks move is not defining a new up market. Okay, so we need to be very careful about calling that. Right now, we're just calling it sideways choppy.
Yeah, and it's crazy to think that just some news that comes out from some sort of a trade negotiation could be a catalyst to run us up to previous levels, and not having any, fundamental, trajectory behind
No.
it. And that's kind of how we got down to these levels in the first
Yep.
place.
Yep. Yeah. And it's so, I'm listening to these, press releases about this trade deal, and they're like, who's the trade deal with?
Hmm.
Maybe India, maybe Mexico. What's this trade deal? And they're like, I'll tell you later. And you're like, what? And so it's an interesting kind of game that these folks are playing.
Yeah, and President Trump loves to make a spectacle out of any good news, right? Like, he's become a very good promotions personality. And so if we do start to get some finalizations of any of these deals, you could see them.
Oh,
Oh,
it'll be up
bring
in
the cameras
lights.
in, bring the cameras in.
Yes. Let's sign some documents, and the trade partners will be like, what documents? This is like a handshake deal. No, come in. We have to do a press. We have to bring in, but make sure we have the makeup on and all that good stuff.
Yeah, let's not get into Trump and makeup, because we could be here for a while with that one. Um, but when you bring up the VIX trade, if you want to pull that up
Yeah.
again, I
Yeah.
know that you're always looking to put that one on and off,
Mhm.
and because of the pullback, not quite to the, I don't know, what is it, like 18, 19 level, sitting here at this 22. I mean, we might not ever, or like for the rest of the year, get down to that normality of cautiousness, or like, subtleness, right? And so
Mhm.
at what point are you starting to look to maybe, put this VIX trade back on?
Well, if anybody's watching that has downloaded our free indicators, I mean, one of the things that I like to do is use some sort of lagging indicator. I just for laughs and giggles, through the 3 and 5 day exponential moving average on here. You could also, if you've downloaded our indicators, you can use the MACD indicator. You can change the settings on this thing. We have it set up for what's called the fast MACD. So instead of the usual 12, 26, and 9, we've got a 6, 19, and 3. All of these are exponential moving averages. Um, whatever you use to identify tops and bottoms, as soon as I get a solid bottom identified, no matter how low we go, and that would in this case be this like light blue arrow. As soon as I see that light blue or teal arrow show up, that's going to be my note to go and find out how to put that VIX trade on. Not find out, but decide what options are going to be for that VIX trade.
Awesome. Well, that's one of the strategies in your toolkit. I know that there's a
Yeah.
handful. On our last episode, we did dig into that a little bit more. But here on the AJ Brown Show, we're going to be looking at opportunities, right? Not knowing if the market's going to be going up or down. There are ways to just use time, premium selling to your advantage to kind of build a strategy, a portfolio where essentially, you collect check like an income, or like collect income like a paycheck. There we go.
I'm distracting you because I have to look at gold. Gold is down, man. Have you been following gold?
Well, down,
That's
probably
relative,
in perspective. Yeah.
right? It's at 3270, something like that. Um, it's off of its high of 3400. Um, I don't think down, yeah, down is not the right topic, but like compared to crypto, crypto is back up to what, $97,000. It had been down to $80,000. So, in other words, like you said, there's nothing fundamentally special about what's going on. Um, but we're seeing just kind of some excitement, whether it's bargain buying or what, um, in the whole, risk market. You're seeing equities going up, you're seeing crypto going up, you're seeing some money coming out of, gold and other hedging instruments and going back into the equities market. But again, I might be all by myself out here, but I'm telling folks to let's play it cool for a little bit longer to make sure that this is founded, that it's not just, hot air that's causing the markets to go high.
Yeah, and then I guess since we're on the commodities topic, gold up, oil down, and I'm seeing a lot of storylines about, I think Trump just tweeted this morning telling the world not to buy oil from Iran. China buys a lot of oil from Iran. China has stopped buying oil from the US, started buying oil from Canada. So do you have oil coming down to $58 a barrel, whatever? I think something like that. That
Yeah.
should be good for inflation and things, but it seems as if this price drop is maybe perceived as more negative than positive, right? Because there's that threshold of uh, oil has to stay a certain price in order for us to continue to pump it out the ground.
Yeah. When it gets below 50, when it gets below $60 a barrel, it basically means that here in the United States, and we're one of the biggest energy producers now because of fracking and all sorts of cool technologies. At $60 a barrel, none of the oil companies here in the United States are going to be drilling any new wells. It just makes no sense. The commodity isn't high enough priced to justify putting in the effort to find new sources, right? There's enough supply at that price. And if it goes down any further, if it starts to get down below 50 or 40, that usually means that some of the wells, it doesn't even justify us pumping the oil. It makes more sense to leave it in the ground and buy it off the market than it does to create our own. So we're watching closely the price of oil, and I'm not sure when we're going to start seeing that trickle to our gas pump. It usually takes, 3 to 6 weeks, and we'll see if the price. But there's some shenanigans going on with, the global market and where people are buying their oil. So um, that's an interesting play as well.
Yeah, the chart I just pulled up is 18 crude oil down 18% in April, the worst month since the onset of COVID, right? So that's kind of that like consumer habits, trepidation, things like that, that was pretty severe very quickly during COVID, although now we're kind of self-inflicting it. Let me see.
Yeah,
I
I
do
think
have
people are putting off traveling. They're putting off, summertime. The oil price is usually because people hit the roads, they hit the people are afraid to fly. Uh, I have some trips coming up, and the better half, she's actually talking to me. She's like, "I'm a little bit afraid to fly." I'm like, "Really?" But yeah, so there's that fear out there.
I did, before we go into the other segments of the show,
Sure.
I did come up. So, like, one of the headlines I saw today was, McDonald's reports largest U.S. same store sales. And I always kind of think of this as, okay, the average consumer is not buying fast food as much. That it can usually be a sign to say, hey, there really is a slowdown happening. But then when you went over the inflation numbers and you were like, inflation really feels more like 8% than 2%, there was this tweet that went viral this week, of the McDonald's prices for some of their items only in the changes in the last 5 years. And so one of the examples is, a medium French fry being $1.79 in 2019 and $4.19 in 2024, for an increase of 134%. And when I see things like this is more of what an average consumer feels when it comes to inflation. And, really my question to you, I guess, is because, maybe you've seen McDonald's prices for longer than I have, but like to jump from 179 to 419 for some fries to me is like crazy. And am I wrong in my kind of reaction to seeing these numbers here?
I had a similar so I don't know when the last time I actually went grocery shopping was, but I was asked because we had some surprise guests. So I was asked to stop and go buy hamburger buns. And I went into the store, and in my mind, hamburger buns, a six pack or whatever those little, are supposed to cost 89 cents. Yeah, no. I was sticker shock. I think the last time I actually bought something like hamburger buns was probably around 2016, 2017, something like that. So having to spend $3.50 on a 8 pack or 6 pack of hamburger buns floored me as well, and that's just at the grocery store. So, uh, eh, I, yes, I think that during we've had huge inflation that was perhaps spurred on by the supply chain stuff happening during the pandemic, and it never came back down. And that's something that happens with prices. They tend to go one direction and not the other. Um, so, yeah, I think that the everyday person is kind of flustered by this. I know I was flustered about those hamburger buns.
And it's like, why? Like shouldn't we have created processes that make the development of scalable food supplies cheaper? Is it ingredients costs? Is it corporate greed? Is it taxes? Is it all of these things that are just right? Because like in 5 years from now, if we come back on the show and we're like, hey, medium French fries is $8, it's like, where are we going with this?
Yeah. Well, I think the jury's out on that. I mean, I guess you can look at some of the different reasons, whether it's, I think it's a little bit of all of it, but depending on the news sources, you'll see like, oh my gosh, it's because of all the CEOs taking big paychecks, and then the other news sources will say, no, it's because investors are getting dividends and they're doing stock buybacks. And then, no, the ingredients are too expensive. Or, no, it costs too much to pay employees to flip burgers. Or the tax rate on corporations is too high. So, you know, nobody's really looking at the problem. That I think that's the issue. I think people are looking at the problem through their divided political lens versus actually looking at the numbers. Nobody's really doing an in-depth analysis that isn't biased. And so, you've got two different views on things, and that usually means that nobody's going to take any actions because nobody can
Yeah.
agree.
And this next chart is just the monthly sales numbers, and I declining the last 3 months, the most since the pandemic. And so, this is not a good trend. But I just that the price difference for some of these items just blew my mind. Like, a lot of people were reacting to that. Not to mention in California, where they increased the wages for fast food workers to, like, I don't know, the highest in the country. And so that's just another layer of pricing being passed through to the consumer.
Mhm.
Let me just see here if I had anything else that I thought I would run. This one caught my eyes, and I don't know if you agree with this, but in the last 5 years, we printed over 10 trillion. China did not, and this is what we have to show for it. And this is industrial production growth, China versus U.S. And is this what we're trying to fix with some of this? Bringing business back to the U.S. And is this a stat that seems reasonable or seems like it could be accurate?
You know, yes, I think that is something that's accurate. I think that that's a big deal, right? Uh, you really haven't seen China over the last 40 years get too much involved, maybe in the last 5 years with the whole Taiwan thing, but they're kind of like little silent. I know there was a huge when I went and stayed like 2 years in Italy, there was a lot of purchasing of some Italian, resources, land, stores, by China, but it was kind of on the down low. Like, oh, we kind of noticed that there's a whole bunch of Chinese businessmen here and they're buying stuff. But, with the US, I think we've been investing a lot of money in over the last 40 years in like making sure democracy stands and things like that, like let's do some regime changes in different governments that produce oil. Like we've been spending our money kind of not business minded, right? Whereas you look at China and, they in just the last year, they've started up 20 nuclear power plants. And by the end of the decade, they expect to put 150 nuclear power plants. And they have a goal of being carbon neutral. And different than the US, where we make goals and then we kind of miss them. I don't think they miss their goals, and they've created miles and miles of tracks of high-speed rail so that people can get places really quick. And, so they kinda do stuff, and I don't know if we've spent our money well here in the States, and I don't know what that means for the future. But yeah, I think that they are kinda like the frog in the water that you boil, and you boil it slowly, and you don't really notice that the frog is getting cooked. I think that China's been kind of, doing this progress, that we haven't been getting anything for our money. You know what I mean?
Yeah, it's crazy because it's kind of like the trade-off. Like, we have a lot of freedoms here. That's kind of like the big difference between US and China is you can be what you want, you can say what you want, you can, that's what democracy is. China kind of doesn't have that version, but maybe it's also to keep people in line so that we can stick to the things that are important, like feeding
Stick
our
to the
3
plan.
billion feeding our 3 billion people, right?
Yeah,
Um
but you don't hear about China like going over and spending bazillion dollars trying to control a government or something like
no,
that.
no,
You
I
just
mean,
hear about China like really producing a lot of stuff and owning the ports and buying ships in order to deliver stuff and make things stuff for the rest of the world. And but you don't hear about them like defending their, if anything, you hear about them like opening up universities. And so I'm not
building
sure. I think
flying
you got
cars. Have you seen the drone cars? Like
yes,
like the reporters are going like, even if it's a setup and they're getting the reporters in the flying cars, the reporters are
yeah,
like seeing the futuristic vision firsthand.
absolutely. China's got flying taxis. We've talked about that here for like the last 20. I remember people talking to me when I lived in California in Silicon Valley. They were like, within the next 5 years, we're going to have flying taxis. And that was 15, 20 years ago.
Yeah,
So, like, it just doesn't happen. Like,
too much legislation, maybe too many rules, too many restrictions. Uh,
maybe. I mean, I think that what happens, and this is just my opinion, but what happens is like somebody disagrees with your plan and it goes into our court system, and the court system is so backed up that it takes like 2 years before it gets resolved, and that's 2 years wasted. And it's just because we have all this freedom and our voice is heard, it means that one person who doesn't like what's happening can, disagree and stop everything. That's just one perspective. So I don't know. I
Well,
don't know if it has to do with regulations and legislation as much as it just has to do with, we always try to please everybody here and make everybody get on the same page. Whereas I think in China, they just kind of like, do stuff. And if a couple people are pissed off, then a couple of people are pissed off and it just goes on.
yeah, and if they want to say something and they say a little too much, maybe they'll get,
And maybe they
shoved
just,
away. They
yeah.
get just, hey, buddy, we're gonna need you're not helping the cause here. But as you're mentioning all that, there was this big Doge new Fox News roundtable yesterday, which was actually very eye opening because these are these quote unquote Gen Xers, or the next generation Ivy Leaguers, the Elon followers who all dropped out from doing, probably, one of the guys was like at Harvard. He was like, I dropped out of Harvard to help Elon and the government and Doge rein all these things in, and now they hate me there, but I don't really care because I think this is, a greater good. And they each went into like their individual projects, and it was very enlightening because they weren't using like the political rhetoric. They were like, look, the problem is there's an account that nobody can track, so we just asked if you're going to use this account to upload a receipt, and then everybody stopped using the account. And it seems as if the US government has all these things that are just so old that if we did use the amazing technology that we create in this country for our own good at scale, then maybe we could get things done quicker. And that's kind of what I took away from this. So, if you get a chance at some point, you should, I'll send you the link. You can watch it. But one of the examples was the mine. Have you heard about the mine, the retirement mine?
Yeah.
All
And
paperwork still, all by paper. I mean, it was just an example. So it's like, if we could start to streamline our own government processes that we all have to kind of abide by, then maybe we could save a little bit of money and, compete with the behemoth that is China, because it seems like they might be kicking our butt right now, and we don't really want to admit it, but Trump is out here trying to do something, but he can't do everything, even though he
yeah,
tries.
I think that it's a culture change that's being called on, and I'm not sure how you change culture. I think it's not something you can change overnight, but yeah, I think it's not just putting in the new processes. You actually have to change a culture.
Yeah, and yeah. All right.
That's
So
hard,
we'll
but
we'll
at the
keep.
same time, the scoop is you know, we over here investing in the markets, we can play with whatever you deal with us. I kind of like to think about us as like, we'll just make it work no matter what you send our way. So whether the market's going up, down, or sideways, we can make this work. But it is good to take a minute and try to figure out, the bigger problems.
Yeah, and like you mentioned on last week's show, money doesn't just disappear; it just
No.
changes hands, right? And
Yes.
so we're one of these mediators using this wonderful tool of options to change the hands. Markets go up, markets go down, markets go sideways, markets open, markets close. We're going to be leveraging all of that. All right, so
That's it.
we've got a couple names that AJ is going to run through. We got his pick of the week. We've gone a little bit longer before taking our break today, but I do want to draw attention to AJ's quick links page. I threw the link in the chat. This is where we've got all of AJ's goodies, his social links, the free indicator suite. You'll see some of the indicators in the upcoming examples. We've got his daily workshop. So if you're new to options, or if you're new to some of these premium selling strategies, it's a great place to start. We've got our coaching program. We've got our general trading trainer information, all here on this wonderful quick links page that is in the chat. Head on over there. We're going to take a short break. We're going to then dig into AJ's pick of the week. We've got our speed round, and then we'll get everybody out of here for the weekend, positive weekend. We haven't had a happy Friday like this in a while.
Yeah.
All right, folks, sit tight. We'll be back in a jiffy.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right, AJ's pick of the week. I was actually a little surprised when I saw this name because I would imagine it's a brand, unless we're going short here, that's probably not feeling the love lately. And so this week, AJ, you are taking a look at Guess Jeans, or Guess the brand, ticker symbol ES.
Yeah.
Where do we want to begin? What are you liking?
You're right. I do want to short it. So let's start there. Let me go back in time a little bit here. I'm going to take a look at 6 months. So yeah, Guess hasn't been the favorite. It's gotten into a sideways choppy pattern. And the reason why I want folks to take a look at Guess is because it's, our fast MACD indicator is just kicking butt, identifying when to get into the trade. So now if I zoom into this price action since we've been going sideways, you'll notice, I get a couple of end of day signals, and I absolutely love end of day signals. So what that means is I don't look at the markets during the trading session unless there's a signal I'm acting on. I just come in after the market's closed and I see which signals have popped. If I get a signal, then I'll set up looking at that symbol during the next trading day and looking for an opportunity to, do whether it's open or close a position, right? So some of these end of day signals reverse, which is good because you actually want, if you get a signal, you want it to reverse without any sort of question the following day so that you don't make any mistakes. But then when you do get a good signal and you do get the other follow through, this has been playing through very well ever since we've been in this sideways channel. So yesterday we got a end of day signal. So yesterday evening we got an end of day signal that we should be shorting symbols, shorting either the stock, or the other alternative is you can buy some put options, right? I'm not getting the follow through today, so I haven't been wanting to place that trade. So, yesterday evening I said, "Oh, I'm going to look tomorrow," which is now today, for an opportunity to short Guess Jeans. But that opportunity hasn't showed up yet. It may show up later. The market still has another 4 hours to go. So I'm not, worried about that. But as of right now, I don't have the follow through to go ahead and short it. But that doesn't mean it might not happen on Monday or Tuesday. So what am I doing? I'm looking for that follow through. I'm looking for that good signal and that good follow through for me to short this symbol or buy that substitute option. The substitute option I have my eye on is the Guess January 2026. So I'm pretty far out in time. $17.75 put. There's been a couple of special dividends that Guess has given, which has made the strike prices funny. So you might be saying $17.75. That's not a standard strike price. That's right. They adjusted those strike prices because of the dividend. But I'm looking at that. And let me tell you why I would be interested in that back month deep in the money put option versus shorting the stock. It's because if I buy that put option, it's a cash trade transaction. Whereas if I short the stock, well, the shorting the stock requires me to have a margin account. I might have to pay some interest to the broker for having borrowed their stock in order to short it. And it creates a whole bunch of other complexities where if I just buy some deep in the money, far out in time put options, and again, I'm looking at the Guess January 2026 $17.75 put options, that's going to serve the same purpose as shorting the stock.
Awesome. Guess Jeans, which owns a few other brands, I believe, as its as a holding arm. But yeah, I mean, if people are pulling back on McDonald's, I can only assume they're pulling back on their Guess Jeans. I mean,
Right.
you know.
That deep in the money, far out in time put option, as Guess Jeans drops in value, will appreciate in value. It's basically betting against Guess Jeans. And it also allows us to get into the business of selling put insurance contracts to other traders. So once we have those back month, deep in the money, far out in time put options in our holding, we can then sell put options. So the best time to sell those put options is when we get those bottom reversals. And if you're using our indicator, you're going to look for these light blue signals. And every time we got one that wasn't immediately reversed, like the one I'm thinking about specifically is this guy right here and this guy right here. These were not immediately reversed. We made a fortune on selling those premiums. And so, you set up your insurance business by buying that back month deep in the money put option I've been talking about. And then every time you dip low and reverse back up, you can sell that put premium. And it's just like selling call premium in reverse. And it works the same way. People pay you in order to buy put protection. So you might as well be in the business of selling put options for protection. You'll make a fortune.
And that's the name of the game here at Trading Trainer. Was this a name that came up in this week's mastermind session, or has this just been something on your radar for some
This is
time?
on my radar. When we have our mastermind sessions, the way that those work is folks who are part of our program, we all show up together on a Thursday and they start throwing candidates at us to get our 2 cents on. And we start, letting people know what we're looking at, why we like this one, why maybe we should hold off on this one. And we wind up picking the one that looks like it's going to be the best bang for the buck. Yesterday, for instance, we wound up with 2 that looked really promising. So I put it back out to them and I said, which one do you want to prepare during today's session? And we voted and we picked one. And then we spend the rest of the session actually preparing a trade plan that everybody can follow. In this case, I look for things that are just, and call me lazy sip, but I look for things that, have clear black and white trade signals that are irrefutable, that makes it just like butter to trade. Like you get the signal and then you do the next thing and it's kind of guaranteed money. The Guess is not the most popular name out there. So, our users sometimes are excited about what's hot or not in the news. So this has been something that's been on my personal radar. Talk about boring stock. I mean, Guess Jeans is boring stock. Talk about opportunity to short this thing. We just need to see that follow through. So far, we haven't seen that follow through today. We may get it a little bit later. Otherwise, I'll be looking again for it, maybe Monday or Tuesday.
Yeah, very nice price point for any of the smaller
That too.
portfolios that might be looking for a nice little newbie position to kind of experiment on. This sounds like a great candidate for that. All right.
Also, those put options, those substitute put options are about half this price. So, you might think $11.75 is a good price, currently trading at about $11.41. I believe those substitute options are trading down at like $5 a share.
And that's the beauty. That's the beauty of this approach. All right, we've got about 10 minutes left. We've got 3 names in the speed round that the folks want to get your opinion on, AJ. So let's run through them. First name Rob out of Tallahassee, Florida, wants to know what's the scoop with the cruise lines, specifically Norwegian Cruise Lines, ticker symbol NCLH, a name that we've looked at on the show a few times.
Yeah, I like this. I like selling premium on this. Cruise lines they've had an interesting go of it over the last 6 months. They kind of fell off of my observing list. So give me a second to zoom out a little bit. I'm going to look at about a 1 year of price action. Yeah, okay, we're back down. I guess Norwegian Cruise Line for a hot minute there, doubled in price, but now they're back down to where they were about a year ago. I guess you're looking at the possibility to do some buying. Let me see. This level of $16 does tend to be a bottom for Norwegian Cruise Lines. They just reported their earnings. Investors weren't too shocked by that. And now we're getting a signal that's materializing today for an end of day signal that could be an opportunity that says buy some stock. Again, I'm going to wait. I would say to you, let's wait until the market closes and make sure that this light blue arrow is still there. And if that light blue arrow is still there, let's plan on Monday to think about buying some of this stock. Either you're going to buy, now this is opposite of my guest Jeans. This is where I actually want to buy the stock instead of short the stock. Or I could buy a substitute option. Let's see. We'll use the Trading Trainer Options Lookup tool, which is available to anybody who wants to. It's available free. You just have to go and sign up on that Quick Links page. Let's look at NCLH, and let's look out in time. I'm thinking again. The January leap, here we go. You can even go out to March, but how deep in the money do we want to go? There's one other feature we have with this options lookup tool. We can look at price components, and that'll help us know whether or not the option we're thinking about is so deep in the money that it would act like the stock, only at a cheaper price. And actually, I found one right now. This Norwegian Cruise Line $8 call. So instead of buying the stock, you could buy this $8 call that doesn't expire until January of 2026, and it would basically move just like the stock, but at a cheaper price. So I could see purchasing this as well. So in summary, yeah, I see what you're seeing. I'm going to wait until I get a solid bottom signal and then look the following day for my entry. But this looks like a great time to buy some Norwegian Cruise Line or buy that substitute call option.
Yeah, I've been ironically seeing a lot of people taking cruises this week. I don't know. Maybe it's like the hot thing to do this spring. All right, thanks for that, Rob. Staying in the South, Jason in Huntsville, Alabama wants to know your take on SentinelOne, ticker symbol S. I always forget what this company does.
They're an AI kind of. They're a company that uses AI to find like cyber threats and stuff like that. Okay, I see what you're seeing as well. Earnings is behind us. That's one of the main things I've been making sure of now. So you saw this bottom. I wonder, did you get in? It looks like the end of day signal was on the evening of April 23rd. And then it looks like on April 24th, we actually had that follow through sometime on the 24th. Did you either buy this stock or buy a substitute option? Because price has been heading up like this. And so here's what I would do. I see about $20 here as a level that I'm interested in, a level that was previously tested. So what I would do is look for my top signal. So in my case, I'd be looking for a purple arrow. And if that top signal appears around this, $20 mark, then I would sell some call options. And then I would use those call options to buy some protective put options. And now I've got this collar in place. So I think you're on the right track. Right now, you're just letting this thing appreciate. You're waiting for your top signal. Now, if it goes higher than $20, if it comes up to like $22, $23, then instead of worrying about, selling premium and all that good stuff, what you're going to do is just when it gives you that top signal, you're going to sell your initial position because you'll make more money that way than selling the call premium. But if the reversal happens around this 20, maybe as high as $21, sell the call premium and get in the business of selling insurance. It's not going to be a bad thing. So I like what you're doing there. Let's continue.
Yeah, hopefully we caught that signal a couple days ago because it would
Yeah.
have been a nice little run up. All right, thank you
Yep.
for that, Jason. Moving on to our third and final name in the speed round, a name that we bring up on the show fairly frequently. Amy in Bakersfield, California wants to know your take on Conagra, CAG. Looking like we're getting lot of signals there.
Yeah. And they're like I mentioned on Guest Genes, they're the signals that immediately cancel themselves out, right? The good signals are good. These within 24 hours cancel themselves out. So what we're doing here is we're waiting for a nice bottom signal, the light blue, that sticks. And we're past giving out dividends this quarter. We're past reporting earnings. Why do I like Conagra? Because they're boring. You don't really hear about them unless you're in the food industry. Conagra is like one of the biggest ag producers, and they've got it figured out. They make really good earnings, especially given the price of the stock. They make really good earnings every quarter, and they really subsidize or pay back their investors for, fronting the bill for them with dividends. So investors don't necessarily look at Conagra Brands and say, hey, I want you to make sure you're making business decisions to make this stock go up in price. Instead, investors are like, I'm going to buy Conagra Brands because they pay me a really healthy dividend. If you buy Conagra Brands, you're guaranteed like 4.5 up to 7%. That's better than a savings account. So that's why investors don't care so much whether Conagra goes up or down in price. So I think what you're looking for is a bottom, an opportunity to buy Conagra at as cheap a price as you can before it starts going back up. So my advice to you is, yeah, that's not a bad idea. Let's look for that end of day signal and look for the subsequent day follow through. And if we don't get the subsequent day follow through and it continues to reverse, make sure you cancel that signal out and just keep looking for the good signal. And I think it's in our future. And I don't mind owning Conagra. I always like having that tried and true company in my portfolio because it's a great one to sell premium at. People are always hedging their purchases when it comes to Conagra. They're always like, oh, maybe I should buy some put options to make sure that Conagra doesn't, that our food industry doesn't go crash out. And there's even people who are buying call options in order to protect themselves from, they've shorted Conagra and they don't want it to work against them. So there's a business in Conagra for selling insurance to people. So it starts by setting up an initial position. And in this case, the initial position would be buying some stock.
Yeah, and if less people are shopping at McDonald's, then they might be spending that money on Conagra Foods at the grocery store. I don't know. I'm just taking a guess. All right, thank you for that, Amy. Looking at the markets, AJ, we're getting close to this 5,700 mark on the S&P. So very happy Friday across the market. Not seeing any tweets. So I think this is still being led by these employment numbers. All right, heading into the weekend, heading into a new month. What are we keeping an eye on? What do we want to look at next week? How do we want to prepare ourselves?
I mean, I'm still paying attention to earnings. I think I mentioned last week I'm not actually doing any of my earnings trades just because of all the uncertainty out there. And in retrospect, I'm looking at some of the earnings plays and they would have played out good, but you know, hindsight is 2020. Going into this earnings season, there's so much uncertainty. I really didn't want to bet anything on any of those, calendar spread strategies. But I'm still there's still companies reporting. I still want to know what they say. I'm parsing through all those conference calls to seeing if there's any trends in the different sectors and in the broad market. I'm looking for where are we going to get this top in this current move so that I can start to get a better understanding of what this trend is. Because, through correlation, all that's happening. And if I haven't sold my May premium yet, I'm looking for opportunities to sell my May premium so that I can lock that in and be good until the third Friday of May. So kind of business as usual, SIP, but just with the added thing of paying attention to the tweets.
Yeah, that, and it just kind of feels better not knowing or not thinking that the world is like coming crashing down every Friday as we head into the weekend, not knowing what news is going to hit and where we're going to open and where we're going to gap and things like that. So, nice start to the month. And we'll see where what do they call it? The rainbow chart. We'll see what your rainbow chart has for us next week as we get some more data, as we head into spring and as things unfold globally. So that about does it for us here today. Thank you again, AJ, for your time. Thank you for everybody for tuning in. Let's go ahead and pull up AJ's Quicks link page real quick. As usual, if you want to get access to any of those indicators, you want to show some love, hit that follow, hit that subscribe across any of the social channels. And then if you want to learn more about, Trading Trainer, about some coaching stuff, all those goodies are here. And as always, if you have any questions, comments, concerns, it's pretty easy to get a hold of us. Any of the social channels, head on over to the website, hit the contact button, send us a DM, leave us a comment. We'll get back to you as soon as you can. Otherwise, let's hope this Friday rally continues and everyone can have a positive weekend. And then we'll, gather again next week and look for some new opportunities. So thank AJ, any final words?
Nope, I'm good. Thanks, everybody. Have a great weekend.
All right, guys, take care. We'll see you next weekend.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.
All right.
Question: have you heard of this company called Lovable?
No. What is it?
Oh my God. Oh my! You literally, it's like Claude. But let me show you what I did. Let me show you what I did yesterday. Because I'm working on this new project with my buddy, and the first thing I always do is like, oh, maybe I need to go. Like, I need a new CRM. I
don't think I got the right website. I got like lingerie.
Lovable.dev. Lovable.dev.
Okay, I got lingerie.
But here, I'm gonna share my screen. This one.
Build something lovable. Idea to app in seconds.
Yeah,
that's cool.
That's what's crazy is like how seamless it is, right? So like I was saying, so what I was trying to do yesterday is like, okay, we're gonna start this new thing where we got to collect leads. Do I need to go create a new HubSpot or whatnot? And then I was like, maybe if I just go here and tell Lovable I want a CRM and I want it to do these things, and that's exactly what I did. Like I just went up here and I was like, create me a CRM that does this, and this. And then and then you just kind of talk to it. You're like, okay, I need a button here that will delete this, and I need this filter that'll do that, and I need this to connect to this charting system. And I'm just blown away at how quickly it just does it. Like those days of having to give your instructions to a developer to
Yeah.
go make things are gone. It's just like, okay, but then like, it's like it literally is a CRM. Like this will replace all CRM softwares, and I'm like, holy shit, you can really just build anything you want if you know what you want and you know kind of how to talk to the robots. So
Yeah.
this is kind of my project for developing, but it's like, what else could we develop that, like, could we create a signaling software? Could we create a place that like pushes notifications or whatever? I was just like, and like this one gives you 5 free every day, and it looks so good. Like I was like, create these sales stages for me, and then I need a lead source section, and then it just pops it in there. It's just wild to me.
I'll check it out.
So I'll keep you posted on that. Otherwise, what else we got? Landing page. I'll have a landing page for us to kind of play with next week. And then I'm going to be in Chicago next week.
We are still broadcasting.